This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past few years, conversations around long-term U.S. government debt and federal budget deficits have been steadily growing. Economists, policymakers, and fiscal analysts have repeatedly asked the same question: how will the United States fund future spending without dramatically increasing borrowing? One idea that occasionally returns to the spotlight is a national value-added tax, often called a VAT, which is widely used across Europe and many other advanced economies. This week, that discussion resurfaced again in policy circles as lawmakers and budget analysts reviewed long-term deficit projections and potential revenue options. While no new national tax proposal was formally introduced this week, several policy discussions and think tank reports highlighted the possibility of consumption-based taxes as a future tool to stabilize federal finances. The renewed attention reflects a broader trend. As federal debt continues to grow and entitlement spending rises over the coming decades, economists are increasingly exploring tax systems used in other countries that rely more heavily on consumption taxes rather than income taxes alone. For now, the signal is still mixed. There is no immediate move toward implementing a national VAT in the United States, but the frequency of the conversation itself has been increasing in policy debates. A VAT is typically applied to goods and services at each stage of production, which often means some portion of the cost ultimately appears in retail prices. In countries that use it, the tax becomes part of everyday purchases, from groceries to services. For households, that could mean small price increases across many products, depending on how such a system is designed. At the same time, supporters argue it could reduce pressure on income taxes or help stabilize government finances over the long term. In practical terms, nothing changes for consumers today. But the fact that this idea keeps returning to the policy conversation suggests it's something economists and lawmakers may continue examining as fiscal pressures grow. Keep an eye on new federal budget discussions, deficit projections, and tax policy proposals coming out of Washington. Those signals will show whether this conversation remains theoretical or begins moving toward actual policy ideas. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.